Lori here for today's business tip. So I wanted to talk to you today about different types of businesses. I get this question a lot, and I think it's very confusing for people who are not really used to being in business. So there are essentially 5 basic types of business. There's sole proprietorship, there is partnership, there's LLC, there is S-corporation and corporation. So I just want to kind of talk to you about a little bit about the differences in them so that you really know which one really should apply to your business and which one you should do. So sole proprietorship is the easiest type of business to get, and really it just goes directly right on your income tax on a Schedule C. And it just means that you are in business by yourself. Everything is done by you. Doesn't mean you can't have employees, because you can. And the problem, I would say the downfall with having a sole proprietorship is that you and your assets are liable for anything in your business. So let's talk about what that means. Let's say that you start your business and things are going well, and then things don't go well and you end up losing your business. Debtors can come after you personally to pay for the expenses of the business. It also means that you can be sued personally for anything related to the business. So it's really a good idea to at least do an LLC. So an LLC is a limited liability company. And what that means is that an individual and the company are separate. So that means you're not liable for what happens in the business personally. So that's why it is a better option. Okay, and then the step up from that is an S-corporation. An S-corporation is also a separate entity. However, S-corporation really just means tax designation. So you either have to be an LLC or a corporation in order to designate S-corp. Both LLCs and S-corps have what is called a pass-through entity. So what that means is that you get the profits or losses that go directly onto your taxes. They essentially go from the company and they pass on to the individual or individuals who own the LLC or S-corp. So LLC is really a great legal entity to have because it does limit your liability. If you are a single member LLC, a lot of states call that a disregarded entity, and they will treat you like a sole proprietor, but you do still have that protection. So it's not really a bad thing. You can also have a limited liability partnership. So partnerships mean that multiple people own the business together. You can either have just a partnership where you own something with someone else. You can own it with a spouse, a friend, a stranger, to business and the IRS. They don't really care any of that. It is better to get the limited liability because, once again, it separates you from your business. So if you were to go the route of partnership, you would want to be very careful and get things together, such as a partnership agreement to protect yourself. You would want something to designate how much each partner has contributed, how much of the profit each partner gets, how much of the liability each partner is responsible for. What happens if something happens to one of the partners? So those are all very important things that you would want to set up if you did a partnership. Okay, so let's talk about why LLCs and C corporations do the designation for the S-corp. So an S-corp really limits your liability. It limits how much you get taxed on the profits. So it takes your tax down to 20%, which is a big benefit. Although with some of the new tax changes, an LLC also does that. An S corporation is restricted, so you can't have more than 100 members. You can only have one type of stock, and you do have to get that designation like every year. So it requires more maintenance than an LLC, a sole proprietor or partnership, or a limited liability partnership. So those are the kinds of things that you want to think about. Okay, so let's talk about a corporation. So a corporation is also another type of legal entity. So people set up corporations if they're going to be getting any type of funding, if they're going to be going public, which is called an IPO. If they are multi-members, they might have more than 100. That would be when you would want to be a corporation. The problem with corporations are that they are double taxed. Okay, so the corporation gets taxed and the members of the corporation also get taxed. So you have to kind of evaluate what is the right path for your business. I would say when you're first starting out, pretty much everybody starts as a sole proprietor, but you do want to get that LLC designation as quickly as you can. It does cost a little money, but it protects you. It protects you. It protects your family. It protects your assets. So that is something that you would want to do at some point. So you want to think about these things as you're setting up your business. It doesn't mean that you can't change it later, but it does mean that you really want to be careful how you set it up. Okay, so I hope this kind of gives you an idea of how you would set up your business, which one you would want to be sure to select, and just to be careful of the little pitfalls that are out there that aren't very well known. Okay, so remember, if you are wanting to turn your craft, or if you already have a store, or you're already in business and you need a little bit of help, or you need some guidance, I have a great Success Path group that helps people know how to navigate setting up a business, running a business, social media, and all of the things that you need to do, including a great community of other business owners to help support each other. So there are links in the description below. You can also check on my website at hardworkingmom.com. And I hope this helped you, and I will be back again soon with another business tip. Thanks for watching. Bye-bye.